Welcome back, traders. And this is a short clip on about yesterday's analysis, and I'll try to give a small insight on this. See, as per our yesterday's analysis, we were expecting the market to gap up open and market to fall from that particular level. Meaning we were expecting the market to do this particular way of movement. So that's what our analysis we made yesterday. And as per analysis, we were trying to take a put position whenever the market was coming down here. We took a put position, and that's where we had one loss here. And this was the last area where we had a put. After seeing this particular moment, we had a put, and then it again stopped us out, and then the market moved up continuously, then went all the way here. And this is see, this particular moment was unexpected into the market, because we thought this market is going to reverse from this end, because as per the price action, we thought this is the highest point where it can move. So we had like a good quantity, and 250 quantity here, and then 250 quantity below this level, and we thought it's going to do the same thing. What it ultimately did, we were planning to, we were having this kind of trade setup to start off with the day, and it didn't work, but we should be happy, in one way, that market came down as we expected, but maybe it didn't turn around from the area where we looked in fact, it went a little bit high, and then it formed a downside momentum. But the downside momentum, or the analysis what we had, or the way that we understood the market was correct. Maybe the execution end, yes, a market stopped out because of the volatility, and if you are trading in Bank Nifty, then you should be ready for all this kind of volatility, because volatility and Bank Nifty goes hand in hand. And Bank Nifty always does this a bit more than the normal index movements here. And since we already decided we're not going to take any more trades, we could identify a double top at this at the area here, and then we had an intention to take a trade in this level, but still, say, as we form our own rules, we need to stick on to our own rules. Whether we find a very good trade, and we find a very good setup. If we have two stop losses, it is good that we stop and then we move away from the trade. But if you're good enough to watch watch the market, and if you're still able to control your emotions and not to take a trade, then it is good. See, the market, we had an opportunity here to take down, because it was forming an M pattern at the top, and you can see there was a breakout of this neckline here. This is also a good pattern to take, and then you can see exactly there was another pattern which was getting developed at this level. You have a short time trend line getting broken here, and then you can see the market started coming down from that particular end. Okay, so this, if you just put a trend line like this, yeah, this was a short time trend line break. Particularly these kind of trend line breaks, we generally look in when a M pattern is particularly forming, and you can see a W. It formed a clear M pattern in the top. If I could get this drawn here, so you can see there's a clean M pattern. And then when you put a trend line break from here, you can enter here, and then you can travel all the way down here till this is your first exit point. And if you're trying to hold the trade, yeah, this would be a second exit point. This movement down, we were expecting from this level, and ultimately it didn't happen. But since we didn't want to take a trade, even though we had a very good setup for us, we know this is going to give us a profit, and we know we are going to cover our losses. But if you decide not to take a trade, and if you have a rule of two stop loss policy, it's better you stick to it no matter what. Market is again going to come again like this. Market will give you again opportunities to come back and trade. But if you see a setup, and then if it didn't work out, in the sense if it again goes back and hits your stop loss, then from 12,500 rupees loss, it would have shown another 5,000 to 6,000 or 10,000 more as well. So, and then psychologically you will be disturbed for the next day trade. At least now you are confident enough that you stuck to the trade policies, you stuck to the SL policy, and then you kept the rules going on, and then your analysis worked well. Meaning that ultimately that's the happiest point. You make money, you don't make money, your analysis was correct, your understanding of the market was correct. So I'm happy with the trade, and I was happy that I could control my emotions and not to take a position at this level. I was happy that I stopped my trade after 2 stop losses, and I'm happy that the analysis or the understanding of the market was right at my level. So that is more important. Market will be always there for us to trade every single day. You might get a better opportunity to trade tomorrow, and you can make money as well. So I just want to have a very quick update on because this fall was very quick. This fall was really quick. The way that the market went inched upside, and then the way that market fell like a falling knife. I just wanted to give a short note on this particular thing, and I just wanted to tell you that I didn't add on my positions, even though I found this opportunity here. I didn't add on to any of the positions here. So hope this video helps you in your trading, and thanks for watching, and please do share and subscribe, and we'll meet in today's evening bank nifty analysis. Thank you. Have a wonderful day.